Hi there. So, next we're going to talk about entrepreneurs and finding the money. So, for an entrepreneur, they have more limited options to financing their business than a larger firm would. Most of small businesses are going to have to obtain their funding from friends, family, their savings. They may have to use a personal credit card even. Loans are really hard to come by as a small business owner. Some of you may know this. The Small Business Administration, the SBA, they will back or guarantee some loans that commercial banks make that are made to small businesses, but they don't really back that many, and definitely not the volume that's needed or the amount that's needed to fund small businesses in the United States. So they're a limited resource. A lot of times, small businesses can use crowdfunding. So, crowdfunding would bring together a large number of investors, something like a Kickstarter, for example. And those investors come together, and in small amounts, they're going to help fund that new venture, and then you'll be paid back by the business once it's profitable. Larger small businesses that are run by entrepreneurs that are growing and they're really expanding, they may be able to access capital from angel investors. And so those are individuals who invest in startup companies, as well as from venture capital firms. Generally, entrepreneurs accessing this kind of funding would be doing scaling up their business quite substantially. You could think of large companies now that were startups, right? Microsoft was a startup, Google was a startup. Large tech companies were once startups and they accessed funding from angel investors and venture capital firms. But there was a very high potential for growth, right? If you're going to start a business, like a daycare business or a bakery, that business might be a great business and it might be very profitable for you, but it's not going to get really big. So you wouldn't be able to access angel investing funding or venture capital funding for the most part. Um, yeah. This kind of leads us to talking a little bit about some of the opportunities and threats for an entrepreneur and for small businesses. One of the opportunities is that they can capture a market niche that is not basically, there isn't like a large business that's in that space. So, for example, there is a food truck in, well, it used to be a food truck called Pineapple Express, and they serve Hawaiian food. And there isn't like a large retail chain that's doing that in the area, right? There's like Taco Bell, or there are pizza retail chains like Domino's, but they can serve that market niche, which is a smaller segment of the market. And they're not going to attract a bunch of competitors because there isn't like a national Hawaiian food chain that I'm aware of that plans on operating in the area, in our local area. Um, Small firms also can develop personal relationships with the individual customers that keeps people coming back. They have lower overhead costs, like they don't need a large accounting department. They can just like hire a bookkeeper for a few hours to do their books. Um, and technology's actually really helped. Um, for example, marketing and Instagram. How many products from small businesses are you aware of and that you buy because they are marketing themselves on social media? There are some threats to running a small business. There's a very high risk of failure. A lot of small businesses end up failing. They just don't make the traction with their intended customer base that they need to stay profitable. In addition, they also, they lack funding. So if they have a rough patch that they're going through, they just may not be able to weather it, and those people may decide it's better for them to just go back to work. They could have a lack of knowledge or experience in the industry that they're undertaking. They might have to bear a bigger regulatory burden that's associated with their industry. that could be spread out in a large business across customers and products. And then Obamacare is great, did a lot of great things, but one thing that is a little hard for small businesses is, except for very, very small businesses, you do have to provide health insurance to your employees, and that could cost hundreds of dollars per employee per month. So I am aware that a lot of small businesses and some franchises, large national franchises, they even try not to hire full-time employees to avoid having to pay these health insurance premiums. So here's some sort of like survival rates. Like most businesses will make it through the first year. The second year, by the fourth or the fifth year, it's like a 50% survival rate. Even, this does persist up until the 10th year of the business. So it's not like if businesses make it through the first or the second year that they are going to survive in the long run. In the long run, they may close. They may have only wanted to run the business for a certain number of years, and there may be some I'm not sure if the data is taking that into account. So something to think about, but it's really hard to keep that business going for a variety of reasons that we've discussed. Okay. You could start your own business from scratch. We're going to explore this concept in our new venture project. It's great because it's just your own concept, your decisions, your structure, everything is fresh. You don't have to deal with any of the prior owner's bad decisions. This could be a lot of pressure for one person or a small group of people. It's going to take a lot of time, money, and effort to build the customer base. Without a track record, it may be harder to get credit from lenders like banks if you do need to expand, or from your suppliers, which are your vendors. Maybe they're going to require that you pay them cash on delivery, whereas a larger business could maybe not pay their vendors for months because of their track record. From securing permits to hiring employees, the logistics can be very challenging. And that leads a lot of people to want to buy an established business. I have a friend who bought I think it's like a wine shop in Central Florida, right? So this shop existed and she thought it was a great business model. And she may or may not have actually even purchased the inventory as well. The organizational structure was already in place. The operating practices were already in place. Their hours, their vendors who they get wine from, right? Their suppliers, and maybe even some of their customers. So the customers recognize this business, and they're just going to keep visiting that business and buying the wine, regardless of who is the owner, right? At least for some period of time. And then you can build onto your customer base from there. Perhaps obtaining financing and credit is also less challenging depending on the accounting records and banking records that business maintained before you purchased it. So some of the cons is that you have like someone else's existing business that you may have to pivot, right? So my friend, their wine business, where were they sourcing the wine from? This person has a big history working in the wine industry in Sonoma, and maybe they needed to change a lot of the inventory, and it's going to take some time to do that. Okay, you could inherit the old mistakes. So any issues surrounding their financials, issues with old employees, current employees, pending lawsuits. I mean, some of these things you can shield yourself from in the transaction of purchasing the business, but you can't shield yourself from things you don't know about. So those are potential cons to be concerned with. You could buy a franchise. We were kind of talking a little bit about how some franchise owners choose not to hire employees for 40 hours a week because they're trying to avoid paying those health insurance taxes or health insurance premiums. Those are examples of franchises like a Papa Murphy's or pizza, right? That's a franchise. So you're buying a business that's a well-known brand, but you're running it yourself. You have to hire the employees. Obviously, your vendors are taken care of, but you have to manage the business yourself. That's what a franchise generally is. It does require, you to handle situations that occur, but a lot of things are taken care of for you, like the brand, right? The marketing, your management expertise. Is important, but there are also people who are going to be managing how you're running that business. Um, yeah. There's very low failure rate, but it's really expensive to buy a franchise. Okay. So we also talked about the SBA being a guarantor of commercial loans. This incentivizes commercial lenders to make the loans because they back some commercial loans. So this is really helpful. SBA is a federal agency. We have local SBDCs, which you can access. These are local offices like in your area, and they'll help you with anything from, building out your marketing plan, building your entire new venture business plan. They may have resources in your area, like, okay, this is a great person who could do your bookkeeping, etc. SCORE, Service Corps of Retired Executives. They provide free comprehensive business counseling for small businesses. And this is coming from individuals who are retired executives, and so they're qualified volunteers. We're going to create a mini business plan, our new venture project. We have an executive summary in there, a description of the business, a financial plan. We're kind of being a little light on that in our new venture project, but that's really important in your comprehensive overall business plan to sort of see, like, where's that funding coming from and what are my cash flows going to look like as cash is going out and cash is coming into the business. And that all said, being an entrepreneur is challenging. And we discussed earlier in part one that it really demands a certain kind of personality, right? There's a lot of risk associated with starting your own business. A lot of people don't choose to start their own businesses. They feel that it is the best option given their opportunities. A lot of people who immigrate to the United States start their own businesses because it is the best opportunity for them. And they're vital in our US economy. Small businesses are 99% of US businesses, and they're 47% of the private sector. They create new jobs, they fuel innovation, and they vitalize cities. Entrepreneurial rates vary from country to country. It's going to depend on a lot of things. For example, we can think about people who immigrate to the United States. They might be looking for opportunities, and they're in the United States. It's not very hard to start your own business. There aren't a lot of regulations or even fees associated with starting your own business. A business license is really inexpensive. And so we have like a low financial hurdle in a lot of ways in this country. And that spurs on that entrepreneurial activity. Whereas in some other countries, it may be more cumbersome to start your own business, licensing, regulation, and then that's going to reduce entrepreneurial rates in the country. So, key factors that influence rates of entrepreneurship are things like per capita income, opportunity cost, and the cultural and political environment. So, like we mentioned, is starting your own business something that a lot of people are doing? Is it looked on as like, in the US, this is a great thing. People really aspire to be an entrepreneur. And also, our political regime is not extremely complex in a lot of industries, so you can start your own business. Opportunity costs associated with starting your own business is really just looking at the idea that you could start your own business, or the opportunity cost is not running some other business. Sorry, not working for another business. So you could work for someone, or you can start your own business. And if there are a lot of good jobs, this might reduce entrepreneurial activity because you might just choose to work for someone else and not be an entrepreneur. We do also see that in countries with lower per capita income, which is sort of contrary to the discussion about the US being favorable for entrepreneurial activity, but in a country with a low per capita income and there may not be a lot of jobs, people have few options. You'll see that they start their own business because there isn't someone to work for. Well, thank you for joining us. I will keep these questions and ideas in the slides for you to think about and explore. If you have any questions about this part of our material, don't hesitate to reach out to me, and I'll catch up with you next week.